Hello traders, and welcome back to another video tutorial. And today we will be talking about the spinning top candlestick and how to trade it. And that will be part of the understanding of reversal price action. So let's go over what we'll cover today. We'll go over the basics, so what is a spinning top. Then we'll talk about how to actually trade with the spinning top pattern. And we'll look at an example of a bad use of that candle and also an example of a more effective use. So let's start, and let's just go over what is a spinning top. So the spinning top candle pattern is a candle which opens, has a wick to the downside, has a wick to the upside, and comes back and closes almost the same as where it opened. So there's a small body with a wick to the upside, a wick to the downside, and a small body. And again, with the reverse here, we have the open price. Here we have the candle going up and down, and then we had it close almost at the same price level where it opened. So this would be a bullish one and this would be a bearish one. So what is actually going on here? What's going on here is that we have a balance of buying and selling activity, buyers and sellers, and there is no clear prevailing buying or selling happening. So in this case, there's a very mild buying because we closed higher. In this case, there's a mild selling, but it's almost no different because the price closes at almost the same level, the same price point. And we have these wicks, and it's called a spinning top because if you just imagine like a kid's toy with the hand taking the top and just spinning it round, spinning the thing round on its little leg. And if you look on the lower time frames and you take these candles, what you will see in each one is price action moving up and down, and then closing at almost the same price point that it started with. So we've got this consolidation pattern going on, and this again the same thing here on the lower time frame, and that will be a range of the high points and the low points, and it's just an accumulation of orders, a consolidation where price does not breach those two sides. And what happens here is that when you have a market which moves, let's imagine for example moves into this candle, and we now ended up with this candle, this indicates that there is a change in market behavior and a reversal, a possible reversal about to happen, because now in this case the buying power has died out if the market has been trending. So it indicates a reversal, it hints at a change in the market psychology and the market participants. Now let's have a quick look at what it looks like on a chart. So here we go. Here we have this candle, you can see, very small body. We have wicks on both sides, and it closed almost the same as the open price. Again here, this one is not the best example because you can see there's a wick to the upside but a longer wick to the downside, but we do have one here afterwards, and that will be a bearish one. So we almost have two in succession here, which is a good sign for trading. Let's look at another one. We've got another one here. Again, you can see we had this run up, and then we had this spinning top right here. Very clear, very obvious to spot it. Also, if we quickly look here at this price action, we can differentiate the spinning top from the doji candle, and you can see here the doji candle opens and closes at exactly the same price with wicks either side. This is also an indecision candle, but otherwise we have another example right here. So that is what a spinning top looks like. Okay, and now let's look at how to actually trade with this spinning top. And the way to trade it is to look for a reversal of a trend, whether it be a large one or a small one, where you're looking to enter, where you will have an indication that the trend is reversing. So as an example, here we have a clear trend and we're looking for a short. We now have a retracement, so we have a new retracement trend going up, and we're now looking for a reversal. And what we can see, if we look right here, we can see there is a spinning top, there is a trend, a mini trend going up here, and we're looking to place a trade. So what happens is we have the spinning top, we had the market rallying up, and the spinning top was indicating to us that there is a change of behavior, change of force and balance between the buyers and sellers. So as you can see, shortly after we had another engulfing bearish candle and another bearish candle, and we could see that the market began to reverse, to continue on its way down. So that's one example with the continuations as a method to reverse. Here we could see another example, another spinning top, but however this is not so clear because in this case we have a ranging market. We have another example here. You can see that the market rallied up. We had one spinning top here followed by another one. This is a good indicator. Sometimes they happen two in a row because we have a longer term accumulation, a longer term range, and then we can see the market pushed up one more time before it began to reverse again. So that indication showed that a reversal was coming. We just don't know when until we actually get our confirmations to enter. So to bear in mind while trading with the spinning top is not to trade it on their own. Again, as usual, to trade it together with other confluences. So in this case, you might have a trend line. You may have, again, you may have a Fibonacci level that shows you where to trade. You may have an area of confluence. And once you have all these factors together, then you can look for your spinning top. And then you may also have, it's advisable to have a confirmation, for example, some other candlestick pattern. In this case, we have a very bearish candle price action to confirm that we are going short with the stop loss above and take profit down below. And the same in this case, and also the same in every other case. In this case, we have a nice zone area here. And here, just for the purposes of an example, we have a very strong trend. And all of a sudden, we have a spinning top, clear spinning top pattern here. This is not one of them because we don't have long wicks on either side. This also looks like an interesting one. However, the market kept rallying and we have no confirmation. But if we look after this candle, we had a clear bearish price action, which would give us a good indication the market is now reversing. And that is usually what you'd like to look for, because the pattern itself, the spinning top itself, is not a confirmation of its own. And if we actually zoom out a little bit, perhaps we can see something on the bigger picture. We can see that actually there is also at the same time a trend line happening here. So that works well together with the spinning top conflict. In terms of unclear examples, we don't really want to trade anything which is in the middle of a range or in the middle of nowhere in between many price action candles. So for example, we have one spinning top here, and we also have one here. So neither of these areas will be looking for a trade anyway. So although they are spinning tops, they are not a reason to place a trade, because the market here is not very clear and it's choppy. So thank you very much for watching, and look out for the spinning top candles, both bearish and bullish, when you are thinking about entering a reversal in your trading setups. Practice on your chart and you'll get better with time, and very good luck.